people can always kind of come in and start talking, but we can always move it to like a general voice if you thought it'd be better to do that.
I don't mind. I have got a presentation that I just like. It would be good to just, well, it'd be easy to talk through the presentation, I guess. But if it's a major lift, then don't worry about it. It's fine. I'm just conscious that yeah, I'll just be talking for like 10 minutes, and hopefully people can stay focused.
You have any preference, Deets?
No, well, you can. We're gonna stay here on stage.
That's all good.
We're just gonna give. I just put out an announcement. We're gonna give folks a couple minutes or another minute to join, and then we'll get going.
Yeah, all good. I'll tell you what I can do actually is just dump the presentation into a Discord channel so people can open it if they really want to. Maybe that's the easiest thing.
Yeah,
that's great. Yeah, throw it into the voice chat.
Did you go to ETH Denver by chance?
I did not. I feel like I've missed out on a solid one there.
Yeah, it was it was pretty nice, but the amount of merch there was just truly mind-blowing. Like, I've never seen so much free like clothing and swag and just crazy amount of stuff.
You had to bring a backpack just to be able to carry everything.
Yeah,
backpacks to carry the other merch.
Right. Well, hey, we're a minute after our start time here, so why don't we can go on ahead and get going, and hopefully we'll see people filtering on in. But hey, thanks everybody for joining us for another community call. We got a really fun one today, doing an AMA with Jordan from Stakewise. But today I'm a little bit under the weather, so actually Matt's going to be our solid host today. So Matt, why don't you take it away and let us know how this call is going to go.
Thanks, Deets. And good morning, good afternoon, good night to wherever you are in the world. And I hope everybody's having a great day so far. Pretty thrilled to be joining the stage with our guest for today's call, Jordan Sutcliffe. Am I saying that right, Jordan?
You are indeed, yeah.
Cool. Yeah, Jordan is the business development lead at Stakewise. I know we've been having some conversations behind the scenes, and definitely it seems like a good guy and a really good protocol. So wanted to kind of get their thoughts on the landscape and just their protocol and just the space as a whole. So Jordan, why don't you tell us a little bit about yourself and what Stakewise is?
Got it. Sure thing. And thanks again, guys, for the invitation. It's great to be able to connect with new communities, and especially you guys, loving the work you're doing. So yeah, it's a pleasure to be here. As you mentioned, Matt, I'm the business development lead at Stakewise. I did actually prepare a quick presentation, so maybe I'm happy to kind of like run through it quickly. I think it'll be good value add to kind of give a baseline understanding of what we do, or ETH staking in general, but then also some of the nuances with our platform, which I think are very relevant for people like yourself that are looking to maybe utilize us. So I think that'll probably be like a good place to start. As you mentioned in the voice chat, I put the presentation in there. So yeah, if that's okay with you, Matt, if I can just run through this, I think that'll probably be the best way to go. And then maybe afterwards, like, throw me all the questions you need, as long as they're friendly, okay?
That sounds like a plan. So just from my perspective, we'll let you kind of do your whole presentation. We'll ask the community for their questions, and I'll kind of fill in the gaps with some questions I have come prepared with. So go for it.
Awesome. Wicked. That sounds cool. So yeah, I'm sure that you guys are fairly familiar with e-staking, but there's no harm covering some of the basics. So here at Stakewise, we're a liquid ETH staking protocol. We've also just launched on Gnosis chain about a month ago. The Stakewise itself has been in development for over 2 years now, and we've been live on mainnet for over 1 year. We've got about 80k ETH committed to our platform by about 4,000 different users. And the goal of our platform is basically to remove like the key barriers to entry for people who want to earn rewards on the Beacon chain. So first off, you have things like for native ETH staking, you need to have 32 ETH requirement. That is not necessary for our platform. We run a staking pool. You can come and stake with us with any amount of ETH. But also on the infrastructure side, we've basically got leading node operators that handle all the validators for us, so our users don't have to worry about that. And then also, as a liquid staking platform, I speak to a lot of people about staking, and it's quite amazing the amount of people who don't appreciate fully what the term liquid means when it comes to staking. And essentially, there's two key things. Well, first off, when you come and stake with us, you will receive a token which represents your deposit. In our case, that is SETH2. And that token allows you to do two things. One, it allows you to unstake at any time. We've got secondary markets where you can trade your SETH2 back into ETH, and I'll touch upon those a little bit further later. And also, the whole idea with liquid staking is that you can actually utilize your staked ETH capital. You can take your staked tokens and use them within the rest of DeFi. We completely envision an environment where the majority of ETH is actually staked, and liquid staking tokens will almost be the majority of ETH you see floating around DeFi, because people can essentially earn staking yield as like a base layer and then utilize their staked ETH tokens to do whatever they want to do within DeFi. There's a few nuances to the Stakewise platform in particular. So one of which is we run a dual token model. The way that works is we separate principal that is deposited into our pool and the rewards. So if you come stake with us, we give you SETH2, but the staking rewards accrue in a separate token called RETH2. And there's a few reasons why we went about this. First off, it's just like a nice clean way to see exactly which principal you're earning yield on and exactly how much rewards you've earned. This token model also actually provides a higher staking yield. The reason for this is when you bundle, when you assign a staking pool just to a single token, what you are effectively doing is bundling ETH invalidators and historic rewards together. So for example, if you have a staking pool that contains 10% historic rewards, these historic rewards are not interest bearing. And so if you deposit into a single token staking pool, the way to visualize it is you're essentially buying a share into that staking pool. And if the staking pool contains 10% historic rewards, then actually 10% of your capital is actually going towards buying those historic rewards. Now, because of this, you end up diluting your capital a little bit when you end up staking. That's not the case on our system. The historic rewards, because of the dual token model, are correctly assigned to those people who actually earned them. So new users coming into the platform do not have their capital diluted by these historic rewards. 100% of their capital goes towards essentially earning a staking yield. And one of the other little things is that it actually enables compounding. So it's a bit of a misconception that staking pools auto compound rewards. It's just simply not possible right now because all ETH is locked within validators. So on our side, we have liquidity pool set up between RETH2 and SETH2. So users can trade their RETH2 back into SETH2 and essentially compound or reinvest their rewards and compound their yields. Another thing that's worth touching upon is our approach to decentralization and the infrastructure that we run. So we call it like a semi-permissionless decentralization. Essentially, the way that works is that anyone can apply to be a node operator, and we have a node operated infrastructure package, deployment package, which we provide to prospective operators. But rather than being like fully permissionless, we have a DAO elected committee which vets applications, and all the prospective operators need to enter a testnet and have to go through stress testing, scenario testing. And then the final stage is once all that testing is complete, the Stakewise DAO essentially has the final say and votes upon whether they want to allow the node operator onto the network. So we launched this initiative in the start of this year, January 22. We fully appreciated that we needed to start to decentralize as we were growing as a platform. And since January, we've had 2 node operators join alongside us at Stakewise, which is VeryHash and Crypto Manufacturer. And we've got several others that are within the testnet right now. I've named a few, but there's also a few others that are not yet public, so I won't be naming their names, but let's just say, they're all leading node operators. The idea being that we can try and provide the optimal security for our users, but also the optimal yield. Things like slashing downtime penalties have an impact on pool APY, but it's not just the serious penalties, but generally things like missed attestations and just general poor validator performance can lead to lower yields. So yeah, our aim is to provide maximal yield for maximal security, and obviously we fully appreciate the importance of decentralization. We plan to keep innovating in this space, and we'll be using the new technologies that come along, like DVT, to kind of push for that maximal decentralization. And I guess one of the things that's worth mentioning on this topic is that it's not just like the number of nodes that are important, but there's certain things like their infrastructure, their location, their cloud provider. It's no good having hundreds of node operators if half of them are running on AWS, for example. So one of the things we're doing when we're at the stage of adding node operators to our to our network, we're very careful to be not just adding node operators for the sake of it, but making sure that all their infrastructure differs, and we're decentralizing as much as possible on these core parameters essentially. So that's kind of one of the things that we're heavily pushing towards on our platform right now. In terms of liquidity, I mentioned we're a liquid staking provider. Our main liquidity pool is on Uniswap. We've got about $165 million worth of liquidity on there for SETH2. We've been using concentrated liquidity on the Uni V3, and it's proven to be super beneficial. Basically, like the peg stability. There's a graph on the presentation that like compares the peg stability of Lido with a Lido staked ETH with our staked ETH, and you can pretty much see, there's no comparison. Like in terms of, sorry, there's not no comparison. They are highly similar. Like the peg stability of our staked ETH is just as good as Lido's. And the reason why I compared it to Lido's is because they're often seen as like the gold standard in this industry. So it's important to show that, we can certainly compete on this side. And it's also worth mentioning as well that we're looking to make some small improvements to this Uniswap pool, essentially by reducing the fee tier. And that should essentially close the remaining gap between SETH2 and ETH that you can see at the far right of the graph there. So we're also launching new liquidity pools. We've just launched on Curve. It'll be going live any day soon. We've got the liquidity gauge. We're going to start adding incentives to that pool to start encouraging capital to flow in. And we've also got decent seed liquidity for this pool. The Tribe DAO passed a proposal to stake 10K ETH with us. And they're going to be using a portion of that to seed this liquidity pool. So the idea being that the more liquidity pools there are, the more stable our peg will be. And we're looking to add further pools. We're in discussions with other protocols as well to increase the liquidity pools that have SETH2 even further. There's a slide on like considerations, which I think it's not the most sexiest slide in the world, but I think it's important for anybody who's thinking about staking with us or using us as a. So like first off, is time on mainnet. Like in this environment that we all enjoy, time on mainnet is kind of like a key security parameter almost. The longer you've been on mainnet, the safer you seem to be. So we've been on mainnet for over a year now, and our SETH2 contract specifically has been live. I think it's been like for like 15 months, and we've had no security concerns to date. We were actually the first staking provider to move to non-custodial staking. We did that in April last year, and we previously used a multi-sig, just like everybody was using. Ours is called the Horcrux. You can guess why the name is called that, because there's 7 pieces of the Horcrux. And it's all detailed in our documentation, but it is worth mentioning that we have about 18K ETH staked with us right now, utilizing that multi-sig. We fully plan to transition away from that multi-sig as soon as we can. But essentially we need to wait for validated withdrawals before we can do that. Other than that, we've had several audits, and they're all public, and we're currently going through another audit now. The way we view it is that you can never have enough audits, and also there's currently no slashing insurance in place. However, we're working closely with one of the leading insurers in this space, and we look to be coming upon an insurance deal very, very soon. So that can be expected in the very near term. And there's also a bug bounty program coming up, which will be live very soon too. The other thing to mention is that the whole protocol itself is managed by a Stakewise DAO. The DAO is community owned, and that's one thing we've been very keen to ensure that we didn't sell ourselves out and raise enough capital so that investors own the DAO. We've been keen to keep the community in control here. And the DAO basically controls everything. So whether it's like changing protocol fees, whether we want to add node operators to the network, or whether there's any changes to smart contracts, everything has to go through the DAO. One other thing that's actually worth mentioning as well when you think about staking providers is the risk of is what we call it hostage risk. So what this means is when if you think about it, node operators, their business is they want to keep running validators for as long as they can, right? That's how they make money. They want to keep running validators, and there's a bit of a conflict of interest when a a staking protocol like ourselves says to that node operator, "Oh, hang on, the pool wants its funds back. Can you spin down your validators and return the ETH?" What can actually happen is that node operators can refuse to do that and actually hold pool funds hostage. So one of the things that we implemented on our side, and I believe it's unique to our platform, where the DAO, our DAO actually controls the exit signatures for the node operators' validators. And this way we can actually force eject validators from the network. So if they misbehave, we can essentially kick them off. And this is also, so it's like a key security feature to ensure that we can always control the pool funds and return them to the users should we need to. But it also means that things like MEV and tips, which will obviously naturally flow through the node operators, we can ensure that those tips end up feeding through to the pool itself rather than being claimed and kept by the validators themselves, or the node operators themselves. And then the last point on this list is basically touching upon client diversity. The reason for this is it's like a bit of a key topic in the space right now, that Prism is a heavy majority for the ecosystem, and there's a lot of emphasis on diversity of the clients used. So it's worth mentioning that we stake currently 50-50 between Prism and Lighthouse. And we're actively encouraging new node operators who join our network to start using minority clients to help diversify this. And it's also worth mentioning as well that within our infrastructure, we have systems in place that allow node operators to basically transition between clients real time, so that if there is an emergency and one of these large clients goes down for whatever reason, we should be able to migrate away from them without too much downtime. And actually, this is one thing that we test for when we onboard new node operators onto our platform. So yeah, I think that's kind of a super high level summary. There's a few little things I went into more granular detail, but hopefully I touched upon some of the relevant points. So we'd love to hear if there's any questions about us as a platform and what we think about as ETH staking in general.
Cool. Well, thanks for all that information. I think, at least from my own personal opinion, I think that was really helpful and definitely leaving this with a better understanding of your protocol and a little bit more about the landscape in general. I'm definitely going to open up the floor to questions, and I have some as well. But one thing I want to say is I think you touched on this in the beginning, but I don't think people really understand how powerful a liquid asset like this is from if you just look at the traditional financial infrastructure. The fact that we can do this can only be done through crypto rails, right, and on the blockchain. So, this is really fascinating stuff, and it's super cutting edge. So, applaud you guys for kind of being on the front end of that.
No, that's cool. I appreciate that, and you're absolutely right. And a lot of people think that, it's just because ETH is currently locked away in validators. When withdrawals are enabled, liquid staking will not exist. That's just not true, because it's not just the ability to unstake right now that gives you that liquid staking provides, but it's also, as you mentioned, the ability to utilize the staked capital and earn further yield and actually do more with that. So yeah, I think it's super important. It's certainly here to stay. And as I mentioned, we fully expect that staked ETH tokens or just staked assets in general will be the majority asset that you see within DeFi. It makes sense that the first thing people do when they come onto the Ethereum network is to stake their ETH, protect the chain, earn extra yield, and then get a staked ETH token, which allows you to do whatever you want to do within the space.
Absolutely. So, yes, I just wanted to open up the floor to see if anybody has any questions. Again, I can kind of fill in for anyone as well.
Got it. I see a question from Jeremy. Do you want me to just read it out as they come in? Would that be easiest?
That works, and then I'll call Starfire to stage as well.
Got it. So Jeremy was asking, is the mainnet ETH locked in your protocol till merge, or is there withdrawal rules, or you can go in and out of being staked? So Yes, essentially ETH is locked right now. When you stake within a staking pool like ourselves, what happens on the network side is we basically bridge ETH from the current class as ETH1 chain, and we bridge it over to the Beacon chain. That process is currently irreversible. So like natively on the actual chain layer, you cannot withdraw from staking right now. Having said that, that's one of the reasons why platforms like Stakewise exist, is because we basically, whilst the ETH that is being staked within Stakewise is locked away, we still allow our users to unstake. And the way they can do that is simply by trading their token, which represents their staking deposit, back into ETH. We basically pay a lot of money as a protocol to ensure that we've got like liquidity pools that are set up to allow people to unstake whenever they want to, basically. So I guess just to confirm, like ETH staking, unstaking is available if you come through like a liquid staking provider like Stake.
Rafa, you want to ask your question now?
All good, go for it.
Hey, Jordan. That was a well-said presentation. I think my question kind of overlaps with Jeremo's, but do you guys envision kind of setting up an interface for users that have staked with you guys to be able to directly withdraw the ETH instead of going through the liquidity pools?
Yeah, that's a great question, and actually it's something we're looking to improve upon on our side. You know, our aim is to make this whole process as simple as possible, and the more you can basically do via one UI, like for example our own UI, the easier it would be. And so right now we're working on some widgets that will be embedded into our website, so that even though you have to unstake via Uniswap or via Curve, you can actually do that natively within our website. So that's one of the things we're working on right now. And then when validated withdrawals are enabled, again, that'll be something which you can do natively on our website. You can basically deposit your SETH or SETH to an RETH2 back to us, and we'll burn it and return the ETH as well. So right now, you're right, you cannot unstake via our UI, but we're working on it. We want to make sure people can do that. And obviously, yeah, when validated withdrawals are enabled, it won't just be unstaking via trading on the secondary markets. It'll actually be like true native unstaking, where we can spin down validators and return the ETH from those validators.
Very cool. Thank you.
No worries, man.
Anybody else in the audience have a question for him?
Jordan, I got a question for you. Can you tell me a little bit about your team and how you guys operate, how you've scaled up, and kind of what the future looks like for your organization?
Yeah, sure. So I'm sadly not one of the founders. The founder, it was Dimitri. He's the one who had this vision a couple of years ago. He couldn't afford to be to run ETH staking on it by himself, so he spun up staking pools. It was looking for like a pooled solution with some friends. Realized, hang on, this is actually going to be something that could be useful for other people as well. And so the idea of like Stakewise was born. He was joined shortly afterwards by a school friend of his, Kirill, who both have essentially co-founded the company together, or the DAO together, I should say. And that was, as I mentioned, a couple of years ago. And then since then, we've grown from 2 people. We've got 9 people on our team. It's basically myself and Kirill on the business development side. Anything that's kind of not coding is our job. I spend my time doing some marketing, a bit of everything really. It's kind of what it's like when you work for such a small startup company that is like Stakewise. And the rest of the team are all developers, from obviously front end to back end to Solidity. And we're continuously looking to grow. Like, I think it's pretty fair to say that if you're a developer in this space, you're highly sought after. I've seen actually you guys have been doing pretty well on the hiring front as well. You know, we're keen to hire devs. They're kind of the lifeblood of this ecosystem. I can't do my job if I don't have developers building. So yeah, we're certainly looking to grow. We have been growing pretty rapidly I was the 5th employee, and now like I said, we're up to 9. So yeah, we're looking to grow, but the growth needs to very much come from the developer side.
Thank you. Appreciate it.
All good.
Well, if anybody else in the audience has a question, please raise your hand. I'll bring it up on stage. But maybe I'll dive into a question and just kind of looking more broadly at like the, I guess, liquid staking market as a whole. Do you think, just like based on the dynamics of it, is this kind of a winner take most landscape? Do you think that in the end, when we're kind of looking at this, that there's going to be, you know, almost natural monopolies or even like duopolies or plutocracies? Like how do you see that shaking out as over time?
Got it. Yeah, no, I think it's a very interesting question. You know, obviously you got the likes of Lido right now who are almost, I wouldn't say running away with it, but they're like a significant part of the market. But you know, the reason why we continue to exist and we continue to keep building is because we don't believe it will be like a winner takes all. I don't think that's generally going to be healthy for the ecosystem. There's already concerns right now about the size of Lido. And people are looking to diversify away from Lido. And so I think it's important that other protocols like ourselves exist. And also just for competition in general, like competition is a good thing. You know, competition makes protocols better. There are areas where, you know, we are superior to Lido. There are areas where Lido is superior to us. And it's about, you know, we both continue to innovate, continue to build, and essentially push the space as a collective. So yeah, and to your question about like, will it be like a winner takes all? I don't think so. You know, on our side, we're looking to get our SE2. Earlier this week, I was on the call with the Maker DAO to get our SE2 onboarded on Maker. We've been speaking to the Aave team, for example, to get it onboarded on Aave too. So, you know, all these platforms are very keen to integrate multiple staked ETH tokens. They see it very important for people to diversify and choose which staking provider they prefer. So yeah, I think there's definite scope for all of us as different protocols to keep growing. Whether it will be so one-sided in the future, who knows? I think what would be quite interesting is when validator withdrawals are enabled, because right now, if you think about like staking and TVL of protocols, it's only one way. You can't remove TVL from a protocol because you can't unstake like natively. When you can, it'll be interesting to see where the capital migrates. So that's something we're kind of interested in on our side. You know, do we end up taking some market share from Lido, or is, you know, the amount of capital flown into the system, are we able to capture some more of that capital? It's a very interesting space. It's a very hot topic, ETH staking. We expect it to be, you know, we're super bullish on ETH staking, but I think a lot of people are. They know that there will be capital flown into the system. So it'll be interesting to see how it does end up in the long term. But yeah, I don't see it being like a winner takes all, so to speak.
Gotcha. That makes a lot of sense. Appreciate that. Again, if anybody else has any questions, stop me. But assuming there's not any others right now, I guess what's next for Stakewise? You know, what are you guys planning on doing that, you know, hopefully you guys will enable you guys to take additional market share and really kind of highlight your what you guys can do as a protocol? And maybe some options, like I don't know if you guys plan to, you know, stake other assets or other chain assets like Solana, Polygon, or anything else like that.
Yeah, no, thanks for the question. So like, as I mentioned, we at the start, we have launched on Gnosis chain and we are planning to launch on future chains as well. So that is definitely one area where we're looking to expand. I think we're still going to stay very focused on Ethereum though. It's our home network. We see so much potential in this network. And I guess what I was just talking about, like getting our staked ETH token integrated in as many places as possible, is kind of like the one key area where we can, you know, attract capital. If people can, you know, use their staked tokens as collateral to borrow against or to earn extra yield in like option vault strategies, etc. There's lots of different ways that we can kind of create utility for our staked ETH token, and we're very close to actually unlocking a lot of those key utilities on our side. And I think once that happens, then that'll be a key thing that will draw people to our platform essentially. Yeah, I think that's kind of it. I've forgotten if you asked the second question. I think you only asked the one.
Yeah, I think basically I was just more broadly, what was next for Stakewise, but I guess just really looking ahead. Let's say you guys capture more market share, you guys really kind of perfect the art of what you're trying to do now. Do you think that like liquid stake providers, like, are there any other like completely different or supplementary areas of focus that you think are like natural kind of next steps or products that you guys may want to dip your toes into, or is that just too soon to say and you guys just need to execute on the market you guys have in front of you now?
Yeah, I think the easy answer for me to say is too easy to say right now. We've got so much that we want to achieve in this space that we're currently active in. You know, we know we can be better in areas. We want to keep pushing. So it's so much our focus right now that it's almost hard to take time. I'm sure you guys have experienced on your side, and unless you're 100% laser focused on the one thing you need to achieve, then you simply will not achieve the other things you try and do. So we're very much focused on what we're doing right now. One of the areas that we are improving on or pushing is on the institutional side. We've recently partnered with Block Demon. These guys are one of the leading node operators in the system. So we're helping to bring institutional capital into Ethereum network as well, into the Ethereum ecosystem. So that's one thing that we are working on, and I guess is one of the things that is quite interesting on the horizon. We're launching basically liquid staking for institutions in June. So it'll be exciting to see. There's basically a lot of institutional capital sat on the sidelines right now who cannot participate in DeFi because of the regulations. So we're basically providing them an entry into the ETH ecosystem. So that's something that's fairly interesting that we're working on, and that'll be coming out later on in the year.
Just out of curiosity, from like a legal perspective, are you guys like setting up a legal wrapper around that subset of I guess you could call client base? How are you guys structuring that, or is that too soon to say as well?
No, it's not too soon to say at all. Like we're already in the testnet. Like the solution's pretty much built out. It's like I said, it's launching very soon. So the way it would work is we're essentially forking Stakewise, or we have forked Stakewise. These institutions, the reason why they can't take part in DeFi right now is because they cannot afford to have their capital mixed with people who are not KYC'd or people who are just anon, basically. And so the way it's going to work is we're forking Stakewise. We're creating a new staked ETH token that we're calling PSETH, like permission staked ETH. And the way it would work, that people who enter that protocol will have to go through like strict KYC, KYB, AML procedures to ensure that there's no chance that money in that ecosystem will be mixed with the current DeFi ecosystem. So it's certainly an interesting space to be working on. There's a lot of regulations and compliance that kind of comes into it. Luckily, our partners, Block Demon, that's their area of expertise. So we're having to lean heavily on them as to solve that. But yeah, it's certainly an interesting thing that's spinning up. And there's also like permission DeFi is something that's becoming more popular. So for example, Aave created a new lending market called Aave Arc, which is specifically for this institutional capital who can't mix their funds with the standard Aave protocol. And so you're seeing protocols like that, which are starting to come into fruition. And the way I see it personally on my side is you're going to end up with two like pools of DeFi. One that is the DeFi we know and love today, but also there'll be like a permission DeFi where these like investment banks, like pension funds, what have you, will all be able to play in DeFi, but in their own little protected bubble. That's kind of how it appears to be unfolding right now.
Well, I love to hear that. It's always fun hearing that institutions are on the way, especially when it's being done the right way. So I'm really excited that you guys are offering that, and I can't wait to see how that unfolds. And I think it's kind of funny. It's like one of the first times, like, I don't know, in maybe history or since I guess modern financial structures have been set up that I guess retail investors have had like the first opportunity to get it in on the ground floor versus it being the other way around. So I think it's pretty exciting and from that perspective. But I guess maybe turning gears a little bit, looking at the post-merge, right? I think that's what we're all excited about. Obviously, things are going to change, maybe dramatically, maybe not a lot at all from your perspective or from a staker's perspective or even a liquid staker's perspective. But maybe can you talk to us about how you see once the merge to proof of stake happens, how that may impact your users, you as a protocol, your DAO, and just really the ecosystem as a whole?
Sure. So obviously the merge is super exciting. Very excited to see what things look like post the merge. I think nobody ultimately knows, but I think, to be honest, I'd be surprised to see any major changes in the sense that, providing everything goes smoothly, the system that we all interact with will be exactly the same. On the staking side, one thing that will change is, we will actually be providing consensus for the network, and because of that, we will be getting the extra rewards which currently go to miners, like MEV, which is obviously a hot topic for you guys, and tips and such like. So the expectation is that staking yields will kind of, I wouldn't say skyrocket, but jump significantly. There's estimates of above 20%, but I think that's pretty bullish. Like we're estimating like long-term yields to be more like 8 to 10%. So that's one of the things that will be very obvious that happens, like directly after the merge. But then you have this period between post-merge and the following upgrade, which is I forgot what they called it. I think it's like the post-merge cleanup, which is when withdrawals will be enabled. And I think there's a lot of people that think that as soon as the merge happens, like validator withdrawals will be enabled. That's not true. It's going to probably be another 6 months after the merge where that happens. And so other than a jump in staking yield, the way that liquid staking works within Ethereum will probably be very, very similar to how you see it right now. The only thing that'll change, obviously, once validator withdrawals are enabled, is that you will be able to actually start winding down validators, drawing ETH, and as I mentioned, we can actually start burning all these tokens that we've been minting over the past year or two.
That's really great information, and I'm personally excited to kind of see how those rates shape up post merge. But I think there's definitely going to be a little bit of a supply crunch for sure as well. But to be determined. But I think you hit on a little bit, MEV. Maybe talk a little bit about the power that validators or you guys as pools have with MEV, and what's your approach or what's your ethos around having this power?
Got it. Yeah, I mean, to be honest, it's seen as like a really big responsibility. I think that's the best way to phrase it. Like, there's a lot of discussions right now. It's certainly a hot topic in our world. At ETH Amsterdam, there's a whole day specifically for MEV. Like, it's a big topic. And to be honest, I think the best way I can phrase it is a large responsibility. Like, we will ultimately be responsible for how the network, or at least our portion of the network, collects MEV. And it's, as we all know, it's not all good. And so, on our side, we're just planning to, there's two key things here. One is that we are here for the good of the network. We're not here to steal from people or make the whole DeFi experience negative in any way. That is just not positive all around. So on our side, we're looking to work with, or we are working with, like the likes of Flashbots and other people who are leading the space. Blockdaemon is actually quite a big. They've got a lot of researchers working on this space to ensure that the way we do run the validators is as fair as possible, as open as possible, and that's essentially what the likes of Flashbots are trying to achieve. And the second thing is that, and I touched upon it when I was quickly going through the presentation, that the MEV rewards will belong to the users who stake their ETH, and it's also quite a hot topic that the people who actually run the nodes or run the validators on networks have a lot of control. In fact, they have the control. There's very, like, the way it looks like it's going to work is that in a lot of cases they will have the ability, if they wanted to, just to keep the MEV rewards and actually take them away from the users whose actual ETH they're staking in their validators. So it's an interesting topic where there's different protocols who are coming up with different solutions to try and ensure that these extra revenues that come in through our platforms actually end up going to the people who deserve it, the people whose ETH is actually used within the validators. So, and I mentioned it before that one of the ways that we're looking to achieve that is by, we can kick validators off the network. If a node operator is refusing to hand over funds that are rightly pool, they will no longer be on our platform. They will go. And so, yeah, that's one of the mechanisms that we have in place to ensure that, you know, the people who deserve the MEV is actually going to get it.
Well, great. I definitely applaud you guys for that because, you know, I know I've talked to different providers and, you know, I think they're in the same boat. I think everybody who's, you know, in the Ethereum space definitely has a certain ethos, or you hope everybody in the space has a certain ethos, and they understand the power that they wield. So I appreciate your guys' stance on that. But maybe let's look at, you know, a negative situation. Let's say one of your competitors, you know, maybe does one of two things. Maybe they actually, as a pool, start, you know, enabling, you know, additional extractable value for the whole pool, or maybe they just have a more lax approach with the validators themselves, and maybe they're like, we don't really care if you keep MEV, and it kind of starts this arms race to some degree about, you know, which pool allows this or is now has more competitive rates than all the other competitors, and everybody's like, well, you know, I might just switch over to them. Do you think that we could come across a situation like that, or do you think that there would be such backlash in just the community in general that's not a likely scenario?
Yeah, I mean, can that situation happen? For sure. You know, there's absolutely nothing stopping some of the guys out there, you know, being malicious in their way of collecting MEV, and you know, potentially offering staking yields that are way higher than what the majority are offering. But I generally think that, you know, the people in this space, I just don't think they would be able to get away with it for long. The people in this space, like, we're here because we care about what we're the reason why we're down the rabbit hole is because we like care about this whole ecosystem. And I think it's very clear that, you know, I just don't see that situation lasting very long, and that protocol that is going down that route, you know, being popular. Even though there is such a hunt for yields, I maybe I'm being naive. Like, I'd like to think that, you know, if something like that was ever spotted and called out publicly, that, you know, it would seriously be taken note of by a lot of people, to the point where, you know, their platform would no longer be, you know, supported by, you know, the DeFi apps. So I was talking about like how important our staked ETH token to get on different platforms like Aave Maker. You know, I can completely see a situation where if you're a staking pool that's taking advantage of users, that they will just those DAOs would ban your staked ETH token from their network, from their protocol. And you know, there's certain you know, levers that protocols can pull to kind of, you know, even though this is supposed to be like a permissionless space, I still, you know, people who are malicious can still get, you know, sidelined, I believe. So, yeah, I think it can definitely happen. On our side, in particular, you know, we're very, very strict on how we view MEV, as I've just discussed, and there is absolutely no room for doing it in like a, how to phrase this. There's no way we'll ever do it in a malicious way. It's obviously not my call. It's ultimately the DAO's call. But, you know, from the discussions I've been having with our community, we're all on the same page here. We're here for a reason, and the reason is to protect this whole ecosystem. So, yeah, it's certainly interesting to see what happens. Yeah, and I guess anything is possible. But let's just hope that everybody plays ball. And for what it's worth, like, you know, the likes of like Lido, Rocket Pool, all these guys, and not just the decentralized, but also the centralized parties. We're all talking together. We all seem to be on the same page, basically. So I don't see any of the big providers coming out and throwing a curveball to people. But let's see. Who knows?
I'm with you. I really hope so too. But I actually never thought about what you said about just the other protocols that, you know, are integrated with those derivatives. You know, being able to pull that lever and kind of cut off those creative composable solutions. So that definitely is going to help me sleep a little bit better at night, knowing that is kind of a lever that can be pulled. So really appreciate the insight there. I think that was most of my questions, but, you know, I wanted to give another chance to the community. Anybody else have a question they'd like to ask Jordan while we still have him?
Jordan, I got something for you. A little outside of your probably traditional wheelhouse you talk about, but like, what's the next big thing you're looking out for on Ethereum, you know, outside of staking? You know, I guess even just personally, or just, you know, kind of what news lines or whatever is really kind of catching your eye?
Yeah, that's a great question. To be frank, one of the things that's playing on my mind is this is like a bit of a big question, but would DeFi exist without liquidity, without the incentives? And the reason why I'm asking this is because I'm talking about like institutional DeFi. This space is still getting spun up. It's still very, very new. And systems like Aave are struggling, well, I wouldn't say struggling, but it's considering the amount of capital that you would think would be interested in DeFi. This ecosystem is very slow to evolve. And it just has you asking the question, like, is this entire world that we're playing around in right now, does it exist because because protocols are willing to give away their native tokens to support the activity on their protocol? So it's a super big question, but it's just something that's niggling in the back of my mind that, yeah, I don't know. Would this space exist if that wasn't possible? Because the issue I have is that, and I think Compound actually have a proposal going through right now to actually halt all native token emissions. And so I think that'd be interesting to see, like, if that is true, like, how do they compete? Or would they have ever been able to compete if they never actually issued comp to the scale they did? Because they pretty much dropped a boatload of it to the initial users of Compound, right? So I don't know. It's an interesting question that I'm just trying to figure out myself.
Would you say that is a bigger issue in terms of token inflation, or just incentivization overall in general?
Yeah, I think incentivizing using native tokens is just not sustainable in the long term. Unless you want to make your token inflationary, then you can keep pumping it out forever. But then, there's going to be consequences for that. So, yeah, I guess it's I guess we'll just have to wait and see. Like, I'm not saying that DeFi is going to crumble. Like, I don't believe that at all. I think that what you will start to see, though, is a lot more protocols that really rein in on their emissions, if they can, in order to be sustainable in the long run. Like, if we want DeFi to be here in 60 years' time, then I personally think some things need to change, and the native token emissions is one of them. Maybe it was just enough to spin up the system. Right, we just needed it to kind of get the wheels turning, get the inertia, to overcome the inertia. And if that is true, then great. But let's see. Let's see what happens.
Awesome insight.
If only there was a deflationary protocol we knew of.
Yeah.
Yeah. Well, we're excited that we are definitely a deflationary protocol, starting basically last week. So it's exciting time. But yeah, I always wanted the same thing, Jordan. I think it's going to be, especially with the Compound thing. It's one thing if everybody did it, but when you have competitors still kind of doing it, it's going to be very interesting. So, anybody else have any questions from the audience? More seconds.
If anyone has obviously questions later on, I'm more than happy to feel free to DM me on Discord or what have you. I've been a part of the I've been on the Keeper Discord for a long time now, so you'll be able to find me here. Just at me or what have you. More than happy to answer anything.
Okay. Well, Jordan, thank you so much again. I know I have a couple housekeeping items, so feel free to stick around here to those. But otherwise, I know you probably have a lot of work to do. But really, again, on behalf of the KeeperDAO community, the Rook community. Really appreciate you coming in and giving us insight onto the landscape, Stakewise, and just really the future from your perspective in general. So really appreciate it.
Awesome. No, the pleasure is mine, guys. I appreciate it. I really appreciate it from my side. And yeah, looking forward to staying close as two DAOs. Take care, everyone.
Absolutely. Thanks, Jordan.
Cheers.
So a couple of housekeeping items. I think Deets put out an announcement today, but our staking deposit fee will be turned back on at 5 p.m. Eastern today. Some of the other things. So another thing, I'll just do a shameless plug. Please check out my discretionary investment KIP number 22. I will go ahead and drop this in the voice chat as well. And then I guess, next thing I would say, another shameless plug, come out next Treasury Tuesday and hear a little bit more about our investment strategy, as well as, just general updates and the landscape as a whole. I know Stakewise is one of the potential investments we have from a ETH deployment standpoint. So, now that we have a little bit more information, really excited to kind of plug them into just our overall analysis and kind of, see where the L ends up. And then I guess the last one is just please join us for our town hall at 3 p.m. Eastern tomorrow. And I think that's it. Kyle, did you have anything else?
No, Matt, I just want to give a big shout out to you. Really stepped up today and allowed me to be the Scottie Pippen to your Michael Jordan, leading the charge here today. I appreciate you give me a little bit of break on my vocal cords. So just great job today. Thanks.
Absolutely, sir. Well, you deserve it. And take care, everybody. I really appreciate you all coming out. And have a good day.